Welcome to TradeTheNBA.com. This is John. This report is for the 23rd of May. Well, Tuesday gave us interesting action. We moved back up to the peak levels, but could not get above the 76%, and then started to retrace late in the day. That's put us right back in the middle of all of these ABMs, and in fact, critically testing the green ABM at 1750. Right there, we're just slightly above it right now, but moves below it certainly going to put the 61%, and then of course a break of that is certainly going to bring us back down towards the 50% marker. We've been seeing no real interest. Midterm buyers, short-term buyers started to fade out the other day. That was the only thing keeping things at this particular level off of what was the original warning off this DLC spread, and that can happen with shorts. Sometimes it takes a little while for them to develop and mature, so to speak. Plus, you need enough shorts or sellers to start acquiring all of the available shares at the peak. It's been pretty steady above zero at this particular point, but we're getting what's our version of a bearish snake. Tongue is just about in there if we look at the reading for the cyan right there. It's just underneath the orange, which means it's actually in the mouth. Almost looks like it would be coming out of the eye of the snake's mouth. Kind of fun. It would sort of make up some of these little names when you get like those flat lines like this. I call it the crocodile mouth, where it's sort of just going across flat. Kind of situation. So the NQ, similar. It was up at the ABM yellow and closed below it and started to move from there, and is already at its 61% line on the Morganacci lines there, and approaching put those values up here so you can see the green and all of them. Go back and mark them down. And I usually keep a little sheet of those just to have available, because it's always worth knowing where they're at, because those are going to be confluences of what some people would refer to as support, and the key there will be looking at what the readings are from shakeout, blah, 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 blah. You can go through the DOC and the extremes and see if you've gotten overbought within any of those areas, and it becomes very effective in knowing where you're going to get some stall outs and then breaks. Now, of course, we talked about the pop here in the euro that took place under the beginning of a yellow warning right there, and I said that we would touch the lows. We came back to those lows, and then I said it wasn't likely to bounce from that particular point given the damage that we were seeing from these shakeout readings, and the need to retest the lows, which we've now done on a higher extreme. You've got a dip here below the red line, but you still have green above red, so more difficulties for the euro from that standpoint. Bonds still way higher than they should be, but that's some of it's a little bit of a flight to quality, particularly as yield rises and this starts to fall a little bit further. That will put pressure on equities as well, because if you can get a decent return from treasuries that are 100% safe, there's no need to be in risk assets. So that's generally how that works. We can already see the inflation bug is starting to have an impact from gas prices. I think we saw the article, $5 gas in New York. I know it's over 4 in California and that. So it's going to curtail some behavior, but it's also an indication of growth. And the fact that it can sustain these levels means that there's still enough demand out there that's what's driving the increases, certainly not geopolitical in this particular case. Though there is some interest about Iran and whether sanctions from the U.S. there will impact it, but the rest of the European Union and them aren't really going along with that, so that's still available for them. Gold should be rallying off this kind, but this is just some horrible shakeout readings, and that hasn't recovered at all and still doesn't have a buy yet. So here we go for the 5K. I thought I'd show this one because it sort of parallels what we're talking about here. This is Bitcoin. So it had its nice little pump up there, all these positive extremes, G's going all the way back to here. We had the dip below the red line, which was right down at this level. And once we get the DOC spread, it was from a pretty extreme place here where you have this steel this far down. It becomes much more bearish because it's effectively coming from the top side. And once it began, Never could get the green cross above, even coming across these things. And this becomes an interesting one because there are times within a short run that you'll get what appear to be buy signals. And a lot of times they'll happen right around the 50% range where you'll see the shakeout start to rise. You get the yellow above the magenta at that particular point. And it becomes a question of, okay, do I cover at that point to take gains or do I ride it out? For me, usually at that particular point, it really becomes a question of, do I have a reset of steel coming through that's closed off the long setup, and usually this will come before you get a drop off of steel, but particularly when you get a buy signal and you're at that plus 13.5, they tend to have troubles, particularly if cyan isn't under red. In this particular case, you can see that we ended up making it to the low and starting a new cycle down of shakeout ebb and flows. And of course, I'm not even thinking about long if I've got shakeout dipping before I've got yellow above magenta. It happens right here, but it's right at that 23%. That's usually where I start to look and say, okay, hey, do I have any dips below the red line? This is exactly why I was talking about the 5K chart on the Skype chat, was because at the end of the day here, we ended up with a little yellow extreme right here at the 23%, barely could get over it. And I was saying, my expectation would be that we would come back to the lows even on the reset of this setup. And sure enough, that's exactly what happened because, again, the extreme move of the steel, it's not uncommon when you get the dip below the orange, but so far below from the negative 13, usually even when that comes back up, it's going to have to do it, and then it makes a new turn at a little bit higher value, and that's usually when you come back up to retest that bottom low. And it's just sort of a pattern that repeats a lot over time, but like I was showing on this Bitcoin one, this extended run of all negative shakeout before you even return back to positive, it's just a significant distribution and just points out the difference between that rising shakeout, which started right back over here before the breakout and then completely collapsed and still was holding up pretty decent for a little while. But like most of the day here, it was a very small range. We had a little pump up and we started getting DOC spreads that still took a teeny little bit of heat and was short through most of this stuff, and it just kind of sat there and went blah, blah, blah. And you're like, oh my goodness, is this ever going to go anywhere? And then at the brief pop up here right at the end, but the extreme was saying, hey, warning sign, you're at your peak and you're not making new highs. And a lot of times you've got to hold on within the short concept here because a bar like these are so big and so fast that there's no way you can do anything. And entering right down here, while it's not a bad, this was as boring as you could possibly get, just waiting for this. And then finally, at the end of the day, we got a dip, but you'll notice that none of these were dipping below the red DOC. So all we were in was just a weak variation of continuation, which was slightly lower. And that's all we were getting, and it was hovering right around the 50%. Now, more than reasonable to even trade up and down the backside of this 50% up to 61 and over, and then using that one as a trade against, particularly if you're an active day trader. For me, I just hold on to it and let it continue to ride. But we did get effectively, and this is a great reading here, if I can get it to show up on the screen right there. Come on, I'm back in there. It is right down at the bottom there. Let me go up a little bit there. You can see it. Okay, so the X812 there, minus 11.65 versus the red at minus 11.6, so 0.05 of a dip below the red line. Not enough to produce anything. So for me, I wasn't looking for a short cover unless I got a dip of the orange. Really pretty much within the first bar to two, but no, it just continued straight up. And at that point, we had already broke the 50% right there. That was the equivalent on that line on the first move back up. And then it was just continuation. There really wasn't anything to do. And then, of course, that made a lower shakeout right after that. And that continued to distribute all the way through. And there wasn't anything until this pop right here to the 23%. And likewise, same position. It's like, okay, orange rising, I'll wait for that first dip below before it even gets interesting. Well, at that point, by the time you get it, you've already had a new spread of the opening right here and collapse. Now, a little bit trickier one, I look for steel to remain above cyan as a trigger for longer runs to the south side. But what happens is it tends to create a little bit of an inverse effect. The more that you're riding above there, normally we look for that cross from below to above as somewhat bullish. But in a negative move where green or red is moving lower, what happens is it becomes a continuation in the bearish, but what you look for are dips back below the steel to close it off, and then the return back up would become the bullish one, ending the short. So for instance, this was always in a short configuration until closes it right there, and then boom, this turn becomes a bit more positive from a realistic. Now again, you still don't have green over red or anything like that, but you're getting a strong pivot right there that could produce a little bit of activity, especially since the improvement in the extreme histogram is there. But again, for me, you gotta get past that 23% to prove anything. But it just points out that sometimes a short will take a very long time before it finally surrenders. And there was just a significant amount of accumulation from a short standpoint. Every bit of supply that was given was sold into, and not being able to make out the new highs. Now, of course, that reduced the range, but you can see what happened. It increased dramatically. We went down as low as 11 on the spread of the Fibonacci lines there, and then it broke right open to the 20s now, all the way up to 25 there. And we're starting to see the lows coming down here, so 23. But that will still take a little while, and that's not going to dip much lower than this high right here, which is 39. And that's about where we're at right now. If we run across there, that's where that's at. So it's going to start picking each one of these lower highs a little bit at a time until right there, and then we're going to get a nice dramatic drop off unless price comes back up to it. So that's a nice intraday read, and this was a good one because it was sort of ugly, but yet still pretty consistent, where just like on that Bitcoin one, you can see here from the negative shakeout, never went positive throughout the day, and that's always a warning sign that a little bit of weakness built into it. And so it becomes difficult at times to think about shorting into pops because it seems like they might go forever kind of situation, but clearly we can define when those happen. In this particular case, you see my little yellow dots pop up there. Those are the increases in the extreme histogram. And that started all the way from, the beginning of the morning, all the way to 36. And what was the high? All the way up to 39. So it wasn't a whole lot of heat up to 41 3/4. Gave plenty of opportunities. So thought I'd throw that one at you. It's always good to see these kind of setups and be able to trade them effectively, because this was a very nice day by the time it got to the end of it. But boring at the beginning. That was slow as molasses. But that happens, and you just got to take what the market gives you and be patient with it. As always, though, trade well. We'll talk to you later.